Hi everyone and welcome to Moementum channel. My name is Mo, and in this video I'll review my top 2 picks for the stocks to buy or watch right now in anticipation for the December rally. Both of these stocks are in the information technology sector and are showing a great upside based on their intrinsic value. Without any further ado, let's get into it. The first undervalued stock to review is OKTA. The stock is listed on Nasdaq Stock Exchange with ticker symbol OKTA. It was last traded at $236.04, but it is showing a fair value of $299.61 based on its real or underlying intrinsic worth. This shows an upside of 26.9% growth, but with a very high level of uncertainty, making it still an enticing undervalued stock to buy or add to your watch list right now. The fair value is calculated based on Finbox's fair value methodology and allows investors to find companies that are being traded at a margin of safety compared to their fair valuation per share. Looking at OKTA's financials, we notice that the company's revenue has been growing steadily over the past several fiscal years. In fact, the company's year-over-year revenue growth shows a 46.8% increase in the fiscal year ending in January 2020 compared to the year before. The double-digit revenue growth, which has been over 50% for OKTA, for the most part, presents an exciting opportunity for investors who are looking to invest in rapidly growing businesses. OKTA has a double-digit gross profit margin, hovering around 70% over the past several fiscal years. Nonetheless, the company is loss-making at this time and has reported $208.9 million in net losses. As for company's balance sheet, both their current assets and total assets well exceed their current liabilities and total liabilities, respectively, over the past several years. This results in a current ratio of over 1 for OKTA, suggesting that the company has enough resources to meet its short-term obligations. The company is showing a positive free cash flow, though majority of it is thanks to the cash generated from financing and borrowing money. Looking at peer benchmark review, you'll notice that OKTA has a market capitalization of over $30 billion. OKTA had a one-year stock return of 81.9% compared to an average of only 6.8% return for the information technology sector. From a stock volatility perspective, this stock has a beta of 0.98, which is higher than the beta of 0.88 for the information technology sector, suggesting more volatility in the stock price for OKTA compared to the sector median. Beta is a measure of the risk arising from exposure to general market movements. OKTA provides identity management platforms for enterprises, small and medium-sized businesses, universities, nonprofits, and government agencies in the United States and internationally. The company offers OKTA Identity Cloud, a platform that offers a suite of products to manage and secure identities, such as Universal Directory, a cloud-based system of record to store and secure user, application, and device profiles for an organization, and single sign-on that enables users to access their applications in the cloud or on-premise from various devices with a single entry of their user credentials. OKTA was founded in 2009 and is headquartered in San Francisco, California. OKTA does not pay a dividend at this time and is considered a growth stock, focusing on reinvesting money back into the business to grow its market share and continue to innovate. That said, the company has well rewarded its patient investors, and in fact, its stock has grown by over 900% within the span of the past 3.5 years, ever since the stock was added to Nasdaq Stock Exchange. That means if you had invested $10,000 in OKTA 3.5 years ago, your money would have now been worth over $100,000 in a short span of time. Looking at OKTA's last quarterly earnings report, which was announced on August 27th, the company had earnings per share of 7 cents, which showed a 479% plus positive surprise compared to analyst estimates. The company reported revenue of $200.4 million, which just surpassed analyst estimates by 7.6%. OKTA's next quarterly earnings is scheduled for December 2nd, 2020, and the company is estimated to report revenue of $203.2 million and earnings per share of -1 cent. Though majority of analysts have revised their estimates for earnings per share positively for OKTA over the past 90 days. You can see at the bottom left graph here on the screen how the stock price for OKTA has reacted after earnings reports within the past several quarters. You'd notice that within the past 6 quarterly earnings report, the company's stock price has decreased 4 out of 6 times after the earnings report was announced. These declines were all by 1-digit percentages. The second undervalued stock to review, which you could possibly consider to watch or add to your portfolio at this time, is TWLO, with ticker symbol TWLO. It was last traded at $319.05, but it is showing a fair value of $359.86 based on its real or underlying intrinsic worth. This shows an upside of 12.7% growth, but with a very high level of uncertainty, making it another enticing undervalued stock in the information technology to buy or to add to your watch list right now. The fair value is calculated based on Finbuck's fair value methodology and allows investors to find companies that are being traded at a margin of safety compared to their fair valuation per share. Looking at TWLO's financials, we notice that company's revenue has been growing considerably over the past several fiscal years. In fact, the year-over-year revenue growth for the company is at 74.5% increase in the fiscal year ending in December 2020 compared to the year before. The double-digit revenue growth, which has been over 60% for the most part, presents an exciting opportunity for investors who are looking to invest in another rapidly growing business. TWLO's gross profit margin has been double-digit, hovering around 50% over the past several fiscal years. Nonetheless, the company is loss-making at this time and has reported $307.1 million in net losses in the last fiscal. As for company's balance sheet, both their current assets and total assets well exceed their current liabilities and total liabilities respectively over the past several years. This results in a current ratio of over 1 for TWLO, suggesting that the company has enough resources to meet its short-term obligations. The company is currently showing a negative free cash flow, mostly due to their negative cash flow from their investing efforts. Looking at peer benchmark review, you'd notice that TWLO currently has a market cap of over $48 billion. TWLO stock had a 1-year stock return of 208.9%, which is just amazing compared to an average of only 6.8% return for the information technology sector. From a stock volatility perspective, this stock has a beta of 1.57, which is much higher than the beta of 0.88 for the information technology sector, suggesting much more volatility in the stock price for TWLO compared to the sector median. TWLO, together with its subsidiaries, provides a cloud communication platform that enables developers to build, scale, and operate communications within software applications in the United States and internationally. Its customer engagement platform provides a set of application programming interfaces that handle the higher level communication logic needed for nearly every type of customer engagement, as well as enables developers to embed voice, messaging, and video capabilities into their applications. The company was founded in 2008 and is headquartered in San Francisco, California. Similar to OKTA, TWLO is also considered a growth stock, and they do not pay any dividend at all. Instead, they take the money and reinvest it, and they are rewarding their patient investors by stock appreciation. In fact, TWLO stock has shown a return of 1,113% return over the span of 4.5 years since the company started trading on New York Stock Exchange. That means if you had invested $10,000 in TWLO stock, your money would have now been worth over $120,000 in just 4.5 years. Looking at TWLO's last quarterly earnings report, which was announced on October 26, the company had earnings per share of 4 cents, which showed a 200% positive surprise compared to analyst estimates. The company also reported revenue of $448 million, which surpassed analyst estimates by 10%. The date for the next quarterly earnings report for TWLO is yet to be announced, but it is estimated that the company would report a total revenue of $454.3 million and earnings per share of between -6 to -7 cents. Though majority of analysts have lowered their estimates for earnings per share for TWLO over the past 90 days. You can see at the bottom left graph that how TWLO's stock price has reacted after earnings report over the past several quarterly earnings. In fact, in the past 6 quarterly earnings report and after that, the company's stock has decreased 5 out of 6 times. The one exception was on May 6, 2020 report date, where the stock price skyrocketed 46.6% after their quarterly earnings report was announced. There you have it, folks, my top 2 picks for undervalued stocks to consider to watch or buy right now. And what is so unique about these 2 stocks is that both of them are indeed on the up stock list put forward by the famous investor Jim Cramer. Earlier this month, CNBC's host of the Mad Money show, Jim Cramer, presented a year-end list of what he calls up stocks that investors can buy to bet on a market rally through the end of the year. As Jim Cramer says, we call them up stocks, the ones that go up all the times and barely ever go down. Both of the companies that we discussed in this video were on the list of up stocks that Jim Cramer put forward. Do you own shares of these two stocks or would consider to add them to your portfolio? What other stocks are you considering to buy in the months ahead? Let me know in the comment section down below. Please note that these two stocks are based on my extensive research, and nonetheless, you gotta do your own due diligence and research before putting money and investing in any of these stocks that we discuss on this channel or any other stocks discussed here on YouTube. Nonetheless, I hope you found this video beneficial and hopefully provided you some ideas in terms of what stocks you can consider to look into and do more research on. If you found this video beneficial, please be sure to give it a thumbs up and share it with someone who might benefit from the video as well. And of course, don't forget to subscribe to Moementum channel. Here on Moementum, we post weekly various videos about stock market investing, finances, and financial freedom. Hope to see you next time.